welcome to The Trade. Let's get you caught up on what traders are watching out there. US consumer prices increasing as expected in October amid higher costs for shelter such as rents and progress towards low inflation, which has slowed in recent months. And that, of course, is saying that pairing rather bets on whether or not we'll get lots of cuts from the Fed next year. Oil prices rebounding on short covering a day after they fell near a 2-week low on OPEC's reduced demand forecast. Chinese copper smelters likely to further cut production, shut down or extend maintenance to cope with a severe shortage of raw material or concentrate supply next year. And gold prices extended losses for the fourth straight session, weighed down by a stronger dollar and elevated bond yields, while silver, the global deficit, expected to fall by 4% to 182 million ounces in 2024, with growth of 2% in total supply offsetting demand growth of 1%, this according to the Silver Institute. Let's get straight into the technicals now, though, and have a look at the Aussie dollar. Nick Twidale from AFTX joining me. We have seen a bit of a drop. It's now flat, 64.86. After that jobs data was a little bit of a miss, Nick.
It was, wasn't it? And the last two jobs data have come in stronger than expected. So I think that's kind of quite telling. But not too much of a reaction for the Aussie dollar at 7 or 8 pips lower. But it's probably going to confirm the trend we're in at the moment, which is to see the Aussie drop off, certainly against the big dollar. I think if it breaks down through, overnight low was only around 64.80, so if we see it through there, we could extend down to 64.50 and then next support level 64 cents.
Well, let's have a look at some of your charts as well on the Aussie, because they show us bit more of some of the technicals. What are you seeing there? Because we've got to also remember that a lot of this story is not driven by our own data, but it's driven by the Trump trade, which is pushing the greenback higher.
It is indeed, and so the move that you can see, this is the longer term daily chart, down from 70 cents to now just under 65 cents. That has predominantly been on the dollar strength that we've seen through resilient US data, which we saw again last night, and of course the last move's really been on the US election. So it's not really stopped, has it? I think we had that one day last week where we saw a little bit of a sell-off in the dollar, and since then it's been every day. Even if Treasury yields have had a little bit of a break, the dollar's continued to move, and we're now at yearly highs on the dollar index, I think. So it's going to be an interesting next few sessions into the new year, but certainly I think with last night's CPI data coming in as expected, it's still relatively strong, and I know we're looking at the Fed for a 25 basis point cut in December. That may change, especially if we start to hear more details from the new government that's coming in the new year. So there's that kind of balancing act now that traders and investors have got to look at. It's like, yes, we know the Fed's going to react to data, but they can't ignore the fact that 2025 is going to be probably a lot more different than they thought it would be a couple of months ago.
So the thought of getting to 70 US cents sort of seems out of the window. I was looking at your resistance level there. 64 is looking more likely when you look at the trend there.
Oh, definitely. I'd say the trend at the moment, I can't really see any reason for the Aussie to rally too strongly unless we do see some sort of a change in the US, which doesn't appear to be coming anytime soon. We're still looking, when we're trading the Aussie, we're going to look at our data, but we're also going to look at China as well. China's still under a lot of trouble. Their data over the weekend wasn't particularly strong either. We could see spikes on Chinese stimulus, but they're just going to be spikes that I think the market will want to sell into at the moment.
All right, let's have a look at the euro. It's also weaker. I mean, a lot of concerns here too that any potential tariffs could spark a trade war of some sort, or trade tensions with Europe too.
Yeah, so that's been on the back foot for the last few sessions as well. We've seen euro come down quite significantly from those sort of levels above 110. That's the daily chart as well. I've left kind of the trend lines that had kept it in a strong range. If you look on that all the way from Q4 2023, like euro's actually been in a relatively tight range for the last year or so. But it has broken lower now, and we're beneath that 106 level. And on these longer term charts, a firm break beneath those lows from Q2 this year really does open the way back up to parity for euro. So it's kind of a brave new world for dollar bulls out there at the moment.
Indeed. All right, what about sterling? You sending money home? Are you holding?
Yeah, it's come off night, and we got employment data that was a little bit weaker over, and the unemployment rate jumped up, and that saw a really nice move through. Once again, that was a good technical break. It was the 200-day moving average coinciding with that trend line. So I've left that. We got a nice big figure through there. Once again, as far as cable's concerned, I think that we are going to see continued downside, and it's all about this dollar strength really in the market at the moment.
It is indeed, and so therefore when you look at the yen, 154 is kind of where it's holding.
That's your interesting one, and then looking now at the yen weakness, there's talk again that we're going to see maybe some slightly quicker rate hikes from the Bank of Japan than we were expecting even a couple of weeks ago. So this US election, as we know, affects governments across the world and how central banks are going to react. I don't think, if we get close to the 160s again, I don't think the Bank of Japan and Ministry of Finance are going to be happy with those levels. So we might start to see some moves from the Japanese authorities again. But at the moment, while US yields are moving higher, they're kind of quite happy with it. But you've got to trade that trend. So you're buying dips in dollar yen at the moment. Really, we could see more volatility in that particular pair.
Let's have a look at the loonie as well, because particularly when you're talking about the China story and some of these commodities, I mean, copper is a 2-month low. There's been quite a bit of weakness in some of these commodity prices. What is the Canadian dollar doing? Yeah,
so I threw the CAD in because it popped up and it has broken through that longer term resistance. One of the reasons we always trade CAD in line with the oil. Oil has hit fresh lows, and I think you just mentioned we saw a little bit of a bounce last night, but it wasn't too much. It was like 0.5% on Brent and on WTI. If we do see oil break lower, and it is on support levels for oil, dollar CAD could accelerate topside, and then we could be looking for a very swift 5 big figures up to that 145 level again. So CAD's another interesting one, and it ties in with my stronger dollar view as well. If we are going to see this, plus it's a very strong trading partner naturally with the US. If Trump starts throwing his views north, which he's throwing them everywhere, with regard to tariffs, we could see further downside for the loonie.
All right, Nick, always a pleasure. Thank you. Nick
Thank you.
Twidale from AFTX running us through all the currency moves, and of course looking at the Aussie dollar pretty flat after the jobs data. 64.86 is where we trade now. That does it for this edition of The Trade. Be sure to join us again next time.